Let's start. Very good morning. Let's start with we'll move to a chapter fresh. It is one of the simplest chapter we'll be doing. In fact, uh, in the working term, it could be simplest. Marks term, I think weightage could be around 8 to 10 marks we have. So marks wise, I think that will play a very important role. Plus, this chapter will help you in building your base. So once you get in the flow, you'll come to know that what kind of subject we have and how we proceed further. And second is there will be few chapters before I start. A few chapters would be such which will be related more with the accountancy or normal mathematical calculation. There could be few chapters which requires your extreme level of mathematics. But again, as I said in the first class, I'm again reiterating and we would be doing for a couple of days more that no matter how tough the mathematics is, you should be able to read. Today's chapter is something which you see every day in your life. A mutual fund will be starting with. Approximate weightage comes from the mutual fund is around 8 to 10 marks. If your luck is good, it can be 12 marks. I have not seen a student generally making a mistake. But in the past few years, if I speak in the last 2-3 years, institute has been setting paper in such a way either the length of the question is increased a lot or there could be a slight erroneous part in that solution comes in or a question comes in. Otherwise, this chapter is straightforward. It will revolve around only two parts. For example, what is a mutual fund, for example? Now, again, I go back to same thing which I said. Your stipend is approximately, I assume, ranging from 5,000 to 12,000. I am assuming 12,000 on the higher side or 15,000, let's suppose. And you want to buy share of a MRF. It's very difficult to buy one share of MRF with the 15,000. Means it's very difficult. That you will require, even if higher side I take your stipend 15,000, it will take at least 7 months of or 8 months. You will have some expenses also. After that, we have one share of MRF being bought, which comes out. Now, mutual fund, what it does is it collects people from the like-minded people. It's a collection of the, for example, we have all of you in the class. If I collect some amount from you, then the moment I collect some amount from you, I would be able to buy one share of the MRF. If I collect, let's suppose 1,000 rupees and we have 100-200 people, then out of that I can create a fund which is in the auto sector. They might be able to buy the MRF share. They'll invest in a particular sector, particular industry of your choice. Mutual fund is an indirect investment in the market. One investment I can do is directly I can invest in the market. Second type of investment is an indirect investment in the market which comes out. When we say an indirect investment, it basically means is I am giving money to someone else and someone else is buying on my behalf. This chapter might have practically linked what we call as the portfolio managers, But I have a separate chapter, so I'll be taking it separately. Going forward could be a possibility in your study material. There could be a couple of questions which have a link with the portfolio. So I'll tell you that these questions will cover in the portfolio. Will not leave anything from anything which has come in the past, history or study material and so on. Everything would be covered. Anything which has a link, for example, a correlation formula or some beta concept formula or correlation, because mutual fund is nothing but portfolio managers. Portfolio managers are those who manage the portfolios. Basically, you give them the money, they run the show. Mutual fund, you see that they are investing in the telecom sector, they are investing in the airline sector, they are investing in the oil and gas sector, they are investing in the banking sector. But you give them the money, you give your preference to them. The moment you give your preference, accordingly they will invest. Now, chapter wise, I'm saying it's very easy chapter. Just to spend few more time so that you get adaptable to the industry. Post COVID, that's after almost 6 months or 5 months or 4 months of a COVID, or maybe the starting the COVID, made sure that Indian markets are not the same what they used to be prior to 2020 March. The drastic change has come in this industry, and the kind of a money, for example, let me tell you very frankly, last year June, if I was standing, market was in a very bad phase. Feb, if I do not know what date was it, Feb 27th or something, last week of Feb, when Russia had hit Ukraine and everything crashed, and then suddenly problems started coming in the European markets and the US markets and so on, and markets starting falling down globally. Indian markets also went down. Nifty, I think, from 18,800, 700 somewhere went down to almost as low as 15,000. the shares were crashed, everything went one way. But mutual fund is one industry in which money has been kept coming in. We call them as a domestic investors also. It's my money which I'm giving to them. It's basically my money which I'm giving it to them, and on my behalf, they're investing in what? They're investing in the market. So every year, every month, there is a systematic investment plan. Let's suppose you are, for example, you have created a mutual fund and you said every month I'll be giving you a certain sum of amount. Let's suppose even a 500 rupees. That money would go and I'll continue the scheme for 5 years time, let's suppose. Then money comes to the mutual fund. Ultimately, objective of mutual fund is to invest in the market. In the beforehand only, you have selected that please invest my money in the auto sector or this sector or this sector. That's a separate issue. But that means mutual fund kept on getting the money. They will kept in pumping the money into the market. Then we have some of the government schemes also which have opened up equity investments. Means earlier what used to happen when the market used to fall, LIC, one of the big domestic investors, those who used to come and buy. Now you have ample money which public has become active investor. If I roughly speak out the numbers, roughly let's suppose if the demat account were, let's say, about 1.5 crores prior to the COVID, or 2 crores, let's suppose, on the higher side, if I'm take roughly, then we are 5 times of this number as of now. Everyone has become active because this was the only work which COVID could tell them. Everyone is doing, whether they are able to understand, do not understand, and because of that reason, we saw a huge spike in the market in the next 1.5 years of COVID. And then ultimately, market is market because there are people who big people who run the show. They took the profit. 2022 was very, very bad. In fact, March 2023 was also bad because everyone kept selling their shares to book losses because it's a March adjustment which comes in. I have gained some profit, then I book a loss. It's not illegal. It's legally I'm doing so that they can avoid some profits, and so they kept selling in the March. We went down. The normal shares were in a very bad phase, but the money kept coming in. You did not stop your SIP. The problem would have come when the people start redeeming money. Means you ask your money, then mutual fund have to sell these shares and then they have to give back money. So as of now, you are giving back money. And last year June, some of the analysts, some of the those who track markets very aggressively, some of the big people, they said that this could be the first time when public would make a money if they stay invested in the market. For example, if you invested in the June last year and you stayed invested, the foreigners were taking away their money. Someone was asking me, I don't know who asked yesterday, I read the newspaper and she asked that, for example, that 44,000 crores, some amount which have come in the last how many months? July. That's a foreign investors coming in. I do not know the exact data, but could be a possibility. Every day now, foreign investor is pumping in money. Now, importance is understand one objective very clear, please. The price of the share would go up only when you buy. If you do not buy, nothing will go up. Even in fact, let's say tomato price is there, you stop buying. If 70% of the public stop buying, automatically prices will come down. No matter how much fundamental valuation we do over the period of a time, no matter what we learn, fundamentally we would be right, we would be doing perfect valuation, but it's a demand and supply concept. If the demand is not there for any asset, no matter how beautiful that asset is, the purchasing power is not there or buying power is not there, the prices of that asset will not go up. So what mutual fund made sure last year, or what public made sure, was they kept investing. Maybe small, maybe this, but it was a frustration last year. Entire last year it was a frustration. No return from the markets. You buy at 100 rupees, price becomes 95. You buy at 95, price becomes 90. Whether it's a good company or a bad company, then 80, 75, 60. And I know some of the companies which fell from 225 to 45 also. You need that capacity. Even if you believe I am right, your belief goes away the moment price becomes half. That I made the mistake. Means you start believing I have made the mistake, no matter how much comfortable you are. And by the time March came in, everyone around me would have felt, even maybe I would have given a second thought that something is wrong. Either we are not able to understand what the market is doing, or either we are making bad decisions, or public is taking wrong decisions. But post that, the FIs who left Indian markets, or the foreign investor, they started coming in. Now I am holding my shares as it is. You have to come ask for the higher price. You have to come ask for the higher price. Couple of shares, for example, which I discussed with you yesterday. Couple of examples which I discussed with you yesterday. You calculate. So if you go back and check, for around 1.5 years, they had not even moved. One of the companies, Aknit, for example, I think one of my known person would have bought it at 185 or 86 last year, April, mid somewhere. The price did not come till this June 15th. The price was 140, 150, 140. In fact, if you would have invested in a FD, you would have felt I would have got some return. In that, it's a negative return. 180 minus this 30 was almost a return of a 20% negative your portfolio shows. But that he knows, or maybe we know, he would be knowing that might be a company is good, etc. Whether you invested in Reliance that fell from 2700, 2800 to 2300, 2250, whether it was Bharti Airtel, whether it was some IT companies, for example, what you see now. Now, for example, IT companies are doing bad because result season is up, and there is a pressure in the US and the European market, so these companies are doing bad. But if the mutual funds stop buying and stop taking that money, or if I stop buying any kind of a sector, that sector will not move. Could be a possibility. Those who are buying now, it's not again a investment wise, please. Let's suppose I have given the money to the mutual fund, invest my money in the IT sector. They start investing now. It could be this month, next month, next month, next month. 5-6 months is remain, and suddenly we find might be a day 6 months down the track. By the time you finish off your exams and result comes in, you'll find everything has become normal. And the moment becomes normal, first industry which picks up is the IT sector. So what you invested now can give you the return in the next 1 year. Maybe for 6 months it will not move, or it will be down 10%. Could be a possibility. Maybe for another, let's suppose 6 months, it is giving only 10% return. But there could be a possibility a single month will come when everyone will say IT sector is the sector we have to invest. For example, now the focus has shifted to the infra sector. For example, we are spending a lot of in infra. Defense sector, for example, there are companies like HAL, BEL that are shifted, and they are increasing like anything. Whether only orders are coming and they are increasing. One of the another companies which I want you to track in your own time, please. Since we are moving towards the renewable energy side, one of the companies is SJVN. That's a government company which has been doing very good. It was, I think, earlier was in the hydro with water. Now it has moved to the solar also. Price has not moved that much the way it should have moved because it's a government company. Maybe government is holding a lot of stake. But the way it is going with the orders, if things go well, 2030 could be a great year, 2029 could be a great year. But we have not seen that kind of year. Who knows 5 years, 6 years down the track. But this industry, what I'm talking about, mutual fund is, they take that kind of a vision. And if I tell you very frankly, we'll do some questions also in which I'll show you the data would be framed in such a way which was the actual period around 1994, 95 and 2005 and 6. In that period, the kind of a return mutual fund would have given, that was unimaginable. In fact, if I was also invested in the normal equities, that period was one of the best periods of the equity markets in return wise, because we were moving towards the globalization. Mutual fund was just coming up and they just started during that period of time, so they made a good amount of money. Mutual fund might not give you a money instant in 6 months, 1 year, 2 years. It could possibility one year is very bad, 1 month is very bad, 6 months are more bad, 1 year is another bad. Then 2 years slight recovery comes in, 3 years slight recovery comes in, and then you might find in the 3rd to 7th year or 5th to 7th year, let's suppose 7-year horizon I am taking, in 7th year your return on an average exceeds a 15-16% annually. It's not an advice, please, to invest in mutual fund. You might find that as mutual fund sahi hai every day. Mr. Dhoni comes in, or Tendulkar comes in, and these kind of big personalities comes in. But they also give disclaimer. The subject to market risk. So mine is with subject to market risk and educational purpose. So I do not have anything to do. I have a subject I have to explain, because if I do not create that kind of motivation to you about the chapter, what is the use of the chapter? Negatives are there, which I'll anyhow keep telling you along with the time, that what precautions you take. When you overdose something, whether it's a food, whether it's any other item, you tend to have a problem. If, for example, I'm saying it again, you have a stipend of 5,000, you are investing or made a habit of a 10% of 500,000 rupees. It is not a big amount. Return would not be big in the absolute terms, but percentage terms you would know. You would know that how actually I track that industry. You will know the sector which I have given to them, where they are investing in. For example, now the craze is about the defense sector, the renewable energy side. So the electric vehicle side, for example, so the funds are coming in, new fund comes in because they know the choice of the investors. And what will happen actually, you give them so much of money, it is not their own money, you give them so much of money, on regular basis you give them the money, they keep buying. So either the price will go up or will stay stagnant. If let's suppose a crisis happens, when we call it as a recessionary mode happens, or a slowdown happens, in which you stop giving them money and you take back your money. Now they have to give back money. That money is invested somewhere else. They'll sell it off and give it back to you. That is exactly pressure comes in. So mutual fund industry has been doing very good. India was a very nascent stage till then, because public has a very wrong opinion. Most of them, equity markets is gambling. Maybe it's a gambling because the things which have happened in 91 maybe, or 97 or 2003. Then we have a lot of scams which happened. Then 2008 9 which happened. So there are instances in which happened. For example, Satyam happened. On and off we find some companies going off the table and your money is gone. So that perception of the market is, it's perfectly fine, but that you'll find with anywhere. For example, if I'm dealing with 100 people, out of that 5 people would be something, they'll not be as good which I thought, and maybe there is a cheating purpose which will happen. The mutual fund industry knows they also make a wrong decision. It's not they'll not make a wrong decision, they also make a wrong decision, but they know if they make a wrong decision, they have the courage to exit out of the losses also. The moment they feel that something is wrong, they'll exit out, which we generally do not have. Let's suppose I invested 100 rupees, I might not invest at exit at 95. Rather, I'll invest more. I'll not exit at 50 also. I'll invest more. But if they feel that 85 or 75 or 70, there is something wrong which we have done, or company has a bad performance, or there will be problem which comes out, they'll exit from there then and there. So they'll not stay back. So mutual fund accordingly works in the market. It's just a it's just a view that what mutual fund is. It's an, actually speaking, it's an indirect way of investing. I can directly invest in the market. They invest on my behalf. That's an indirect. When I directly invest in the market, I become the direct owner of the shares. I become a shareholder of a company. When I invest via mutual fund, I become indirectly investor in the company. The any kind of the returns from that the investment comes, mutual fund has to return it back to me. I'll dictate everything. Don't worry. Just in mind, create a picture out of it. The money which you are getting, or the market which has stabilized this lot of thing you can give a credit to the general public. They have invested, they have taken some smart decisions and some greedy decisions what we take. Not mutual fund, I'm direct saying that anyhow will have a repercussions also. It's not that that cannot give you money, that will give you money, but you need to know that what rate I'm investing, what valuation I'm investing, how much money am I investing, should I average that out or not. Means if I purchase something, if price falls, a general tendency, should I buy it or not. These kind of things should be avoided, because a falling knife, we call it as a falling knife, you never know how bad it will fall. If it falls, it keeps falling. I'm not talking about good companies, the companies which you have seen in the history for 10, 20, 30 years time. Let's suppose you know the history. Bad phase can come for 6 months time, 3 months time, 1 year time, which can happen to any kind of industry. It can be with any sports player also. But you know the classes will move up. For example, Reliance, as of now when we stand, Reliance is one of the historical example you see which has given an ample return to the investors. Infosys, let's suppose. Wipro, let's suppose. You cannot imagine the kind of return Wipro gave it. Wipro, 10,000 rupees of invested maybe in 1985 or 90s could be in how many crores? In how many crores you cannot even imagine that amount has become now by now. They have given, but this period is very bad phase, because whenever a recession has not come, they are just predicting it will come, it will come, it will come, which has not come. The problem comes, for example, the problem comes in my income source. Automatically, I have to cut down some expenses. So the globally cut down expenses happens first on the IT sector, which comes out. Again, we have a new AI coming in and some disruptions coming in the market. So that will make new companies evolve. Maybe older companies will feel the pressure and so on. But you know, these IT companies over the period have given return. The Reliance, for example, or sector, for example, the sector, telecom sector could be one of the best sectors we have. Only 3 companies are there. Third even don't consider, please, idea, do not even consider. If I take a name, you take a cross mark for that. No matter I am investor or not in that. So you have 2 companies, for example, Jio and Bharti. As of now, they are not increasing rate. What do you think? 5G will come for free to you? For how long time that will come to you free? 5G, 5G, 5G. The 5G will make sure that you are spending at least 20-30% extra going 1 year down the track. The next elections are over, rates will increase. They should have increased now, but which industry is industry. They don't want Vodafone Idea to survive. Only because of that reason, the rates are not increasing. We are at the cheapest rate, and you can find, in spite of being the cheapest rate, compare your telecom bill with the 4-year back or 3-year back bill. It should be higher. Still, we are at the cheaper rate, because the 3 companies are there, and even government knows if that Vodafone Idea winds up, that problem would be that monopoly would come in the market. So that's why it is they're trying their level best, and even that is trying their level best to survive. And now, for example, you might be getting calls, sir, shift to the 5G for free, shift to the 5G for free. That's not for free. There is no free lunch in this world. Remember this, no matter what I say. In financial market, there is no free lunch in this world. There has to be some cost. They'll make sure you get habitual about it. For example, we used to go by a train. Flights were very easy earlier. The Deccan airline, when I came, I think first flight I would have taken at rupees 250 only, the first flight of my life. And some of my cousin went for 1 rupee also. That scheme used to come sometime. But once you get habitual, that train looks very odd. You cannot go in the train. The moment you start now, as of now, you might be traveling for articleship in the bus or auto. The moment you get a private car or cab, third day, fourth day, it becomes very difficult. And then the problem comes in. Exactly same. Why I am telling you this is, for example, telecom sector could be one of the sector which could be the backbone of the industry. Now we are talking about the satellite telecom. For example, there's a company called these names I'm taking. How mutual fund industry would be thinking, how you should be thinking, what fund I should be investing in. So what mutual fund studies is the next 2-3 years down the track, what will happen. One of the companies, Nelco, what you heard the term would be NALCO. That is not Nelco I'm talking about. I am talking about NALCO, Nelco. Maybe you might not have heard that name. Again, I'm saying not to make sure that you invest and go back and invest in that company. It's a Tata company. What they do is that maybe they are in the process of satellite based internet, NELCO. 1992 or 93, that company would have framed that stayed at same level till 2020, and then suddenly the way IT sector, the satellite sector, telecom sector is going, that share price I think moved from 100, 150 to 900 odd levels. Then again came back 500. Now it's 750 or 700. I don't know. It is NELCO. For example, we do not know these companies. The mutual fund who are in the market, they would know these kind of companies. It's not investment purpose. For example, if the technology fails, if that company do not do well, we would not be knowing unless until that happens. But these portfolio managers, because their income is dependent on that source, they have to know it. If you would be surprised if, for example, their salary, let's suppose, is 50 lakh or 60 lakh or 1 crore, their bonus, depending on the performance of the fund, could be 4 times, 3 times, 2 times of the salary which comes in. It's a kind of a job which requires you to be alert at any point of a time, and you have to make sure that the kind of investment you are doing justifies the return period, means justifies the average return over a period of a time. So mutual fund has given a kind of a lifeline to India. The saving habit was already there. It was only maybe a gold, maybe a real estate, or maybe a silver, or maybe some other classes, bonds, debentures, etc. This has started evolving, and the penetration rate, which was very low, that means out of 100, if 3 or 4% were the investor in the mutual fund, they have started increasing. If we move to the higher side, let's suppose 15-20%, you cannot imagine the kind of money we have in India. And it is immaterial. I'm saying very frankly, it's only liquidity which makes sure that market to survive, provided the company justifies by that number. For example, I told you the results of some of the companies are bad. Markets will punish it. Markets will punish it. It's not they'll not punish. The fall will come. Now, for example, one of the just before you join, there was a GST came on gaming and the online companies. I have a video also on the YouTube. You might, if you go just a 15-16 minutes, just watch that video, please. Now it came. There's a company called Delta Corp. For example, I'm saying the Delta Corp is the company. The price was I think 245 or 240 just before that news. Next day it went down to 180 levels odd. So kind of a fall which happened. It was part of an F1O, so it can fall any percentage. 35% fell down. Now it cannot be possible that normal person can sell. For example, I am holding, let's suppose I am not holder in that. For example, as of now I don't know, that time I was not the holder. Let's suppose I have 100 shares. If I sell 100 shares, what the pressure will come on that share price? Nothing will come. Only when the big players sell, then only pressure comes in. And if mutual fund industry, let's suppose, was holding, I'm just taking a rough guess. If let's suppose they were holding and they find this 20% GST will kill the clientele income, etc. So they'll not take even a second thought. They'll go and pump in. For example, if Satyam scam happened, they'll not take a second thought. They'll sell. PC Jeweler scam happened. 600 rupees price now is trading at 20 rupees or so. The moment they find there was huge amount of FIs in that sector, they'll come and sell. We take time. Should we do it? Should we not do it? Should we do it? Should we not do it? That's only public takes it. They know it something has happened, and because they are working on the numbers day in day out. They know if this impact comes, this comes. If this comes, for example, if 28% GST comes in, the elasticity of a demand and etc. concept they apply, public psychology they apply, they know what kind of public will come, how much will come, and so on. Although I can have a different opinion. My opinion was very different. I have discussed in that for educational purpose. For example, maybe mutual fund industry do not have that opinion. My opinion was basically those who have a habit of drinking, they'll drink no matter what you do, whether you increase the rate or do not increase the rate. Those who smoke, ITC for example, every time government increases, but those who have a habit, they do it. I do not do anything. Neither I gamble. I have not seen go also to leave a part Delta for example, if those who are gambling, it's not people like me and you go 5,000 rupees of a stipend, we go there. They'll not even give us the entry. They'll say go buy by looking at our clothes only. They'll say buy. So the clientele is very different. How much difference they play for enjoyment? Maybe a short term it is a hit. Second, if that industry is there, for example, there could be some mutual fund who might think in this way. I'm just telling you that this industry may take a hit for a small point of a time, but could be a possibility that they will change their business model or something else, because if the taxes makes that industry winds up entirely, then no one would have survived. Then after GST things would have been very very bad. So what I'm telling you is we take some lot of time. As a general person you can have your opinion, same way mutual fund will have opinion. Only thing is mutual fund is backed by the money, that's it. So that is the advantage of mutual fund. I'm telling you, in the last 1 year, see what she said was very right. The FIs are now coming in India and they are sitting on the money which they invested here. Some part they'll release for the FIs because they have to book the profit also. Some you are holding, for example, I am holding, will also release. But this is the first time we are seeing FIs sold. Still market were intact, not that kind of impact which came in. And now when they come, they have to come at a higher price. They do not have a choice. This was not the scenario before 2020. So that is something which India has made sure in the last few years. And also some of the funds, for example, I think pensions and so on, they have been also given some liberty to invest in the market, which was not there earlier. So you cannot imagine the kind of money would be there. But I have my own concerns which are there, that there has to be some money which should be in safe instruments, because markets can destroy anything. 2008 crisis, at appropriate time I'll discuss, I'll tell you that why we were saved and why the problem came in, because they had some liberty of investments and we had some restrictions. We were saved in that 2008 crisis. That will be a topic different, because today's topic is mutual fund. The whole story, if I do not would have told you, we could have still done the question. My question will revolve around two things only. It will be a monotonous which comes in. That means you will not even come to know that do we require this kind of a knowledge or not. Every Monday, for example, today is a Monday, you go with the Economic Times, there is a paper called Wealth. It's only Monday it comes. I would advise you in your free time, just flip over some pages, you'll understand what exactly they visualize about the economies, what they actually see in the economies. And that will also help you out in understanding the mutual funds. They'll give you n number of name of mutual fund. At least the naming convention will start coming in, that what kind of a return they have given over the period of a time. But it's for sure mutual fund will give you appropriate return if you stay invested in 7 years. Second thought, that if I directly invest, I might earn better than that, but timing. Why mutual fund we require to investment? You are a chartered accountant, you do not have a time other than the audit. You cannot keep the track of the market. There could be doctors, lawyers, etc. If, for example, doctor is doing and he is watching a market, invest there, and he is doing operation, invest, cut. It could be one of the ads also come these days. I know which advertisement comes in, that doctor forgets his scissor in the patient. That comes from one of the brokerages. Do what you are good at. Means basically they're trying to tell what you're good at. For example, you are doing audit. What kind of audit you are doing? Filing a return, GST return, company other than company, market fell down. No, I'm saying market is such, if it goes up, still you will feel the pain. It goes down, still you will feel the pain. Provided, because if you sell early, made profits, still you feel I could have done something. That anxiety level would always be there. It's a 100% guarantee. It's a human psychology. And if that goes down, night you'll not be able to sleep. Night strategy for next day. What should we do? Average out. This, for example, it has to be there. So it requires a lot of patience. That's why mutual fund is something you invest. You do not see it every day. Why people have made money in the real estate? Once you buy a land or an asset, it's not every day you go, what is the price of land has happened? What is the price of a land? You do not know. But market is something in which whether you love or do not love, you have to watch that. So watching for your purpose, watching for your understanding is fine. But every day if you watch, you will find some pain which comes in. Mutual fund tells you some number, that's NAV what I'll come, because that is one part of the chapter. They give you something, but you will not feel a pain. Plus, you know that we have not over levered. What I have over leveraged have not been done. What I have given them, only that kind of a money they are investing in. What is the worst scenario? What will happen? 100 rupees will become 90 or 80. But in your case, it's possible 100 rupees might become 10 rupees also. So that's a possibility. That pain is much bigger. And when you invest on your own, there is hardly a limitation. Borrow from the friend, my stipend, your stipend, your stipend, your stipend, all stipend. That's done. So you have to watch these out. The Delta Corp example I just took for the purpose of saying that it's one is that how mutual fund two people would see fall in the prices comes only when, for example, Nazara also one of the companies is there, which also fell but jumped up because management came very quickly that what is the impact on their revenue. It went down 17%, recovered back almost 15%. Delta Corp, no one came. I don't know what they're doing behind the scenes, what is happening. It's a part of the FNO. So when it's a part of FNO, derivatives chapter will speak that what exactly happens in that. It's one of the most dangerous instruments we can have for the public. I took that name because you should also be knowing that taxes, what you learn, for you it could be a normal increase of a tax rate, but for companies it is not so. Market behaves. So budget remains very important. Any kind of a policy of a government remains very important. For example, as of now, I think Delta Corp operates only on the sea. On land, they do not have the permission to have casinos in India. That's, sea is sea. Goa, visualize because I have also not seen Goa. Goa in water, ship, inside ship, casino. Means I'm like you have to at least visualize because I know we do not have the liberty, but we don't have to tell the world that we have not been there. So the moment you visualize, that's only, for example, if law changes, let's suppose, I'm not in for or out for, I'm just saying if law changes, then you might see that company again someone comes in. So the mutual fund are the people or professionals, those who come up very early also move out very early. Now few things I'll summarize, then I'll dictate, then we'll move to the part. Mutual fund is a indirect way of investing. I invest directly in the market, returns would come directly to me. I give the money to the mutual fund invest in the market. Mutual fund will invest on your behalf, will ask your preference that what sector I need to invest in, what kind of companies you cannot tell. They'll tell the sector, auto for example, banking for example. For example, I am standing today, it's my own feeling that financials will do very good in the next 1.5 years. Why reason? Because the kind of interest rates have risen. The difference between the rising interest rates, the rate at which the financial institutions lend and the rate at which they borrow, the difference is huge, and that difference will give a huge amount of a return, the margins with the banking sector or the NBFCs for example. So there could be a possibility we might see a good jump up in these kind of a shares. So when you go back home, find out some of the companies, for example, it could be some GIC financing house for example. I'm just taking a name, Bajaj Finance for example. You don't have to invest. Bajaj Finserv could be India Bulls financing. These are very dangerous companies by the way. When they fall in a one way. So, but 1.5 years could be of financials. Banking for example, you have SBI, you have PNB has already risen for example. The rise does not happen just for the sake of happening, because you buy, things will not increase. It's some big people have to buy, and they only buy when they see a clarity in that. Could be a Bank of Baroda, PNB for example, ICICI Bank, Axis Bank, financials for example. So when you go, you watch any of the companies, watch any of the sectors, watch their revenue, what happens. The big 2-3 players pick it up from that industry. You'll know the trend of that industry which comes. So mutual fund, for example, I told invest my money in the financials. So banking sector, they'll take the call whether they have to invest in India Bull or etc. Blah blah blah. They have to invest in PNB, Bank of Baroda, or ICICI Bank, Axis Bank, or HDFC. They'll only take the call. It is not I'll take the call. Companies they take the call. Then mutual fund generates two type of a return. For example, if I invest, let's suppose, I'll dictate every point what I'm saying. If let's suppose I invest in the market in share, what type of income I can generate from there? One is dividend. Second is if I sell, I'll generate what? Capital gain. Similarly, when you give your money to the mutual fund, they will become the shareholder in the books of the company. The dividend will come to them, and if they sell the shares, the capital gain will come. They will return back that to you as per the guidelines of the SEBI. Yes, but obviously they charge some expenses, etc., some commission and so on. But any kind of return what they make, they are liable to return it back to you. At least for the examination purpose. Maybe practically if you are holding mutual fund, you will be finding only one income, dividend income, which comes to you. But in theory, what we'll do, will have mutual fund made capital gain, mutual fund earned some dividend income, they will distribute that income to you. In your hand, that is income. But for the question purpose, it could be possibility they'll say if they made dividend income, if they distribute that, they'll call it as a dividend distribution. If they made capital gain, they distribute to you, they'll call capital gain distribution. It does not mean that you have made a capital gain. It's income for you, but for the purpose of theoretical at least, they'll name this kind of a structure which comes out. So let's put down some part in the theory and then we look at the question. Question will revolve around only two parts, which I think today itself will get the hints about it. So it's a new topic we are moving. Mutual fund. A very, very important topic from examination point of view. Mutual fund. Approximately 5 to 8 marks for sure. I am taking just a rough number which was historical. So I am assuming that they'll maintain at same level. And upside you might have a 10 marks also which comes. And practical theory both can come. Whatever is a practical oriented theory, I'll take along with the chapter. Plus we'll have in the theory also at the end. But whatever is required for the base building of practical, I'll keep covering along with the chapter also, so that it builds up your base. Whatever is the theory, maybe I'll leave it for the end, which is only a theory, but that also becomes important part. So we'll accordingly divide. Otherwise, my chapter will go for a toss. I'll forget the purpose of doing that chapter. So first part, if I draw the mutual fund, if you can see the diagram please before you draw. Let's suppose this is mutual fund, this is investor, and this is market. Any kind of a name of the companies I take in the class is only for educational purpose. I am repeating again please. When you invest in the market, the return directly comes back to you. That's called direct investment. You give your money to the mutual fund will make investment in the market, they will generate some returns from here, and that return will be returned back to the investor. That's a indirect way of investing in the market. That's mutual fund. It is but obvious the kind of a return you can make in direct investment might be much higher than the indirect investment, provided whatever company selected they perform well. Otherwise, mutual fund will make sure that average of 6-7 years you'll get decent return which comes out. And in case you do not feel good about it, then you can switch over the mutual funds. Now it also depends what kind of a mutual funds you are selecting. I am a very less risky person. I want my money to be invested in only the nifty companies, nifty 50 companies, or maybe the Sensex. That's it. I do not want higher return. Average return could be 10, 11, 12% over the historical period if I see. I want someone is slightly more aggressive. He'll say, you invest my companies, mid-size company, mid-cap companies, which are middle size companies, not the higher, not the lowest. In those kind of a companies, return could be higher, loss can also be higher, because these companies are slightly riskier. If they grow also, they grow very well. If they come down, if suddenly the growth does not come in any of the companies, then fall would be exactly on that side. There could be third possibility which comes, small cap, which is the most riskiest segment which comes out. It's maybe what you call a high beta stocks, could be most of them from this third segment which could be there. For example, it could be a 50 crore market cap company, it could be a 40 crore, 100 crore market cap company, small size companies. They might have the capacity to grow to 1000 crore also. But if something bad happens, they might have a 100 crore as a 10 crore also, which will come in. So accordingly, you have to have that risk profile. They give you every kind of option, sector wise, the size wise. They can also give you the option, that option is there. You want equity, debt, only debt, or proportion of that, accordingly do it. The NPS, I think one of the NPS which advertisement comes, if you look at, they also I think some part invest in the market, but they give you the preference, how much you want debt, how much you want equity, and for these years you invest, this is the kind of a return which you get. So the money is kept coming in, and till the time money keeps coming in the market, things will not fall. For example, property market, why doesn't it go down? Because still we have huge population which do not own the house. Everyone has a dream of owning, so they want to buy that out. So the moment that buying will keep happening, things will not fall down. Now what to buy, which company to buy, which sector to buy, given specific time will tell you accordingly. So mutual fund are experts of them. They know that if IT is not doing well as of now, maybe it's not time to move in IT. Maybe banking sector or financial is the time. The moment they feel IT time has come, they'll shift their money from here to here. Or funds become very aggressive in that kind of sector. So that's the indirect way of investing in the market. I'll dictate some points. Please put down. First point. I'll dictate some points on that. Mutual fund collects. Mutual fund collects money from. Mutual fund collects money from like-minded people. People and invest the money in the markets. Mutual fund collects the money from like-minded people and invest the money in the market. The money collected by the mutual fund, the money collected by the mutual fund from the investors is invested as per the preference preference as per the preference of the investor. Preference of the investor could be can be invested in, for example, index funds. You say, sir, invest my money only in the index funds, Nifty Sensex can be invested in the index funds. Invest in auto sector. Let's suppose auto. It could be pharma. Pharma. It could be, let's suppose, banking, etc. That means you give the sector preference and they'll accordingly invest your money. Or financials. What could be next? We mutual fund generates two type of return. Now please understand. Give me a look up. Now when you invest in the market, two type of return you will get. One is dividend, and second when you sell, capital gain. Similarly, mutual fund also will get two type of return. Mutual fund also will get two type of return because he is also an investor in the market. If he sells the share, it's a capital gain, and if he receives a dividend, dividend income. That money which they give back to the investor, the money that would be income for me. If mutual fund has made dividend income, they'll distribute back dividend income. If mutual fund has made a capital gain, they'll distribute for the theory purpose capital gain to you. But in your hand, both will serve as what? Income only. So mutual fund can generate two type of return. Mutual fund can generate two types of return. One is dividend. Don't worry, you'll get habitual to my writing. From my level, I am writing best to my knowledge. The problem is this is technology which is not letting me. Or you understand the feelings, bhavna. You'll get habitual of understanding the wordings. Mutual fund can generate two types of return. Now, it is an indirect way of investing in the market. What you invest by a mutual fund is an indirect way of investing in the market. Let's put down the next point. It is an indirect way of Investor. It is an indirect way of investing in the market. Next point. Mutual fund returns the return to the investor. Mutual fund returns the return to the investor. Mutual fund returns the return to the investor. Now we can draw this graphical presentation. You can look once before you copy the investor. What has happened? Something has happened. It's okay. Investor. Just call someone from outside. Investor. Mutual fund. Market and higher return. The screen is also telling you life should be colorful. It cannot be black and white what you have. I don't know you have started using those kind of pens or not. Give me time, I think. Now try to copy that part, please. Investor will gives money to whom? Gives money. Mutual fund. Mutual fund invests the invests in the market. From market, the generates return, and this return returns back to investor. Investor gives money to the mutual fund. Mutual fund will invest in the market. Market generates the return, and return backs to the investor. This is how exactly the cycle works. This is exactly. Do you have mutual fund? Achha, you just started. I don't know whether you have mutual funds in the FR paper or not. It used to be there long back. The investor gives money to the mutual fund. Mutual fund will invest the money in the market, and it generates a return and returns back to the investor. Now, one more part which roughly I want you to keep in mind, so that when we go to the theoretical part, remember formation of the mutual fund. Like the company, for example, in a case of a company, promoters infuse the money. For example, promoters give the money. We have something called sponsors who come up and make the formation of a mutual fund. Now they will appoint the trust. For India, I think it works as under the trust, and it could be investment company in the global markets or in the Western economies. But more or less, it's like a promoter sponsor will create a mutual fund, but they will not run the show. The people who run the show are the portfolio managers, and that run as an asset management company. AMC is what we call it as. Some AMCs are listed also. I think HDFC AMC is listed. HDFC AMC is listed what we have. So the show is run by the portfolio managers, and it is created by the sponsors like the company. Now just to do a rough comparison between the company and the mutual fund. In the company and the mutual fund, in the case of a company, company would have a shares. Mutual fund will not have a shares. For example, if I invest in a company, If I give them money, they give something in return to me. What they give exactly is shares. Similarly, if I give to mutual fund, they have to give me some written paper on it. They are returning back. Those are called units. So they called unit. In the case of a mutual fund, we have units, and in the case of a company, we have a share. We have share capital on the liability side of the balance sheet of the company. In this case, we have a unit capital. Now, if I want to buy or sell shares, I should know the share price of a company. They are listed. Similarly, for the purpose of knowing that what is the value of my investment which is done, it is called net asset value, NAV. So you should be knowing a basic difference in both of them. In a company, if I invest, we are known as a shareholder. In the mutual fund, if you invest, you are known as a unit holders. Is that fine? Let's draw a small differentiation so that you know how exactly the numbers work. So let's suppose invest in a company, invest in mutual fund. The categorization is you have shares, you will have units. This is share capital. You will have unit capital. Share price, net asset value. It's per unit. Just write that name as of now. This will be maybe our first topic. NAV. Shareholder, and in this case will be known as unit holder. Shareholder and unit holder. NAV is net asset value. NAV is net asset value. Now, two type of questions would come from here. How to calculate that? Two type of questions will be framed. If I speak about frankly on the chapter, we will be seeing maybe both today itself. After that, we'll just be seeing plus minus to some of the questions and so on. But the variety of question would be there is one, that calculation of net asset value per share. I am using a net asset value roughly. It's a per share. That means if I have to buy, for example, today invest in some mutual fund, I should know what rate I am investing. If I want to exit a mutual fund, I should know what rate I am exiting. In the case of a company, I know this is the share price I'll buy, this is the share price I'll sell. Similarly, in the case of a mutual fund, you need to know NAV. That means one part of the chapter would be calculation of that NAV. Second part of the chapter would be that what mutual fund gives back. For example, if I go to the diagrammatic presentation of the first part, in this part, two things will happen. One will happen NAV, which is happening in the hands of mutual fund. Second would be mutual fund returns back something to me. What is the return earned by the investor? So my entire chapter will revolve around two things. One, the NAV calculation. Second would be return. You should keep in mind when I say a NAV calculation, we are standing at mutual fund level. For example, what happens is, let's suppose if this is the balance sheet, what happens is mutual fund collects money like a company collects money. Similar way, mutual fund collects money, it becomes a unit capital here. For example, if 10 lakh rupees came here, bank balance is 10 lakh. The objective of mutual fund is not to buy plant and machinery, furniture, so on, etc. Objective is to invest this money in investment. Let's suppose they have done investment of 9 lakh. The balance here would be 1 lakh. Now, as of now, unit was NAV was 10 per unit, 1 lakh unit into 10, for example. Now, next day, the value of this can go up and go down. Accordingly, my this valuation will change. So, initial investment was 1 lakh into 10. I gave the money to the mutual fund and the bank balance. They invested in the market. Now, after investment in the market, the value will fluctuate. Accordingly, they have to tell me what exactly this number become. So, anyone who wants to enter 1 day, 2 day, 10 days, 1 year, 6 months, 1.5 years down the track, you should be knowing what rate we are entering and exiting. Second important part is, it's a requirement on the mutual fund industry. 3:30 market closes. I think by 7:30 or 8 in the evening on the website they start showing the NAVs of that date. For example, if I invest in the market, if this amount is invested in the market, but obviously if the share price fluctuates, the automatically the investment value will fluctuate. The moment investment value fluctuates, automatically my NAV would fluctuate. So by the end of the day, you would know what exact NAV is, so that you can take a justified decision. You know the rate to buy and sell what comes out. That is exactly how mutual fund industry works. So one part will be from the hands of this we are covering. Second would be investors. The return, what is returned by the mutual fund, investors would be calculating in his hand how much income I am earning or what percentage of return I am earning on my investment made. It will take me approximately, maybe I am saying again, by the end of today's class, you would be very comfortable what kind of a variety of a questions would be there. Then we'll keep changing, plus minus mathematics, this happens, then accountancy is accountancy. He invested somewhere, he forgot his records are broken, etc. He'll give missing figure questions. That is how our questions will keep increasing. That's the but obvious. How will it increase the number? Otherwise, two questions are there: mutual fund return, etc. And then in the knowingly excitement, he might make a erroneous question also. That's also one of the, and those questions also will cover. I'll tell you what you can do best in the exam when these kind of question comes. You have to live with it. Means even if you cry, etc., you cannot do anything. You have to live with that. That questions are made. Maybe it's a human error which comes in, but yes, instead do the justice. They automatically know that if there is some error which has come, they automatically award you marks accordingly, which will be seen. Almost every chapter will have that kind of scenario. And there could be few possibilities where we'll have assumptions. The assumption, wherever it comes, I'll try to make sure that if it's justified, whatever best possible assumption institute could have taken, or if they have taken, we'll take accordingly. If we have a separate opinion, I'll tell you this could have been the alternatives which comes out. So first part we are covering from the practical side heading. For the practical heading, we are covering things. First part. Let's put down net asset value. This is first practical heading, net asset value, NAV. Total asset value minus outside liabilities divided by number of units. Total asset value minus outside liabilities divided by number of units. Now, asset value would be calculated at a market price. Asset value would be calculated at a market price. In case we do not know the market price, then whatever is the book value would be the price of the asset. For example, cash will be cash as it is. If they are invested in debentures, if the market value of the debentures have fluctuated, why it fluctuates, we'll know. I'll tell you briefly here. Briefly in the bond valuation, aggressively or in detail in the bond valuation we'll have. So can the bond value change accordingly? It changes if the interest rate changes. So what I am telling you is, in case the market price of the asset is available, we'll take that value. In case market price of the asset is not available, we'll take the book value. First point, put down below that please. First point below this. Assets would be calculated at assets would be calculated at market price. In case market price is not available, in case market price is not available, then they would be taken at book value. Second point, outside liabilities. Generally, you'll have two type of liabilities only. One is expenses, any outstanding which are relevant to this particular fund or scheme. Second would be they have purchased some shares. For example, I buy the share, I have to pay to the broker. Practically nowadays they collect advance money or within one day because we have become T1 system. Today if I buy, shares will come tomorrow itself. But since we are doing in the theoretical world, there could be possibility mutual fund has bought and there could be amount payable on those shares. Could be a possibility. So two type of liabilities would come. One is expenses. Outstanding. Second is amount payable on shares. Done. Now let's look at the questions from this topic. Let's come back to the book, please. The book will see. If someone is not having, I'll show you the question. Don't worry. In a day or two, you'll get. Read question number 14 once from your side, please. Read question number 14 once from your side, please. This is one of the favorite questions of the this chapter, which more or less in its own way format, exactly same format it comes in, or slightly changed way it comes in. But NAV calculation, without doing that NAV calculation, things cannot move. For example, let's suppose I have invested in the mutual fund, I redeem my mutual fund. So unless and until I know what rate I have sold off, I cannot know my return. So this calculation will become part of the every kind of a question which comes, even if I have to move to second. But yes, if examiner want to reduce the size of the question, then it's okay. He might give you entry and exit point. But otherwise, we'll be calculating this part in majority. I'll read out with you, please. It will make your base framework for the entire chapter. Based on the following information, determine NAV of a regular income scheme per unit basis. Even if it does not say, we'll be calculating the NAV per unit. Listed shares at cost 20 crores. Cash in hand 1.23. Bonds and debentures 4.3. Of these bonds, that means of the above, not listed and quoted 1 crore. Other fixed interest securities at cost 4.5 crores. Dividend accrued 0.8. This dividend accrued basically means is what mutual fund has invested somewhere. Company has announced the dividend, but mutual fund has not received. That means it will stand as what in the balance sheet of the mutual fund? Asset. This will stand as an asset. Then below that we have, which comes, this is amount payable on share, which is a liability. Expenditure accrued would be a liability. 20 lakh shares. One area of a mistake is this. Amounts are in what? Crore. Shares are, units are given in what? Lakhs. The listed shares were purchased when index market was 1000. Present market is 2300. Now understand the meaning of it, please. I have purchased a property 1000 square feet. I have purchased a property 1000 square feet. The rate of the area was 5000 rupees per square feet. I purchased a property. I'm just taking a rough number so that tell me the mathematics. 1000 square feet property when the price was 5000 rupees. What was my investment? 50 lakh. The price now trading in the market is 8000 rupees. What do you think my value will become? I purchased when the per unit square feet was area was 5000. Now the per square feet has become 8000. This value will become what? 80 lakhs. Now look here. The at cost when invested, leave apart that ex dividend and blah blah blah. I'll tell you in one of the questions that what it means is basically it does not have any dividend right included. X income dividend you would have done something. So as of now it is irrelevant for you. It does not mean anything. Cost 20 crore investment. You purchased when the market was what? 1000. Now the market has become what? 2300. In this particular question, since nothing else is mentioned, what could have been mentioned that we'll see as we proceed. 1000 rupees, 1000 was the market. I invested 20 crores. Now the market has become what? 2300. What do you think my value would become here? Logically, with the given circumstances, 46 crore. Sir, how? 20 divided by 1000 into 2300. 20 crores I invested when, if I said 5000 was the investment, now property value is 8000 per square feet, you can give the amount to me. Similarly, 20 crore invested when the market was 1000, now the market has become what? 2300. My investment will become 40. My value of the investment today is 46 crore. Then value of listed bonds and debenture is how much? 8. That means out of this 4, sir, this 4.3, 1 is down. It does not make me difference. The balance is how much? 3.3. So maybe 3.3 value has become today what? 8. This value has become 8. Now, after that, there has been diminution of 20% in unlisted bonds and debentures. That means value of unlisted bonds and debentures have fallen. So they can fall, they can fall. If the interest rate fluctuate, we'll see in the bond valuation completely. In this chapter slightly at appropriate time I'll include that how with the change in the interest rate value of the bond changes. In this case he is saying, question is God, whatever he says you believe, whether you love or do not love, like or do not like. He says 20% fall, a 20% fall, that means 1 crore value will become what? 0.8. This will become. Anything else he has given? Other fixed interest securities are at what? Cost. Even if it does not say, we'll assume them to be at what? Cost. Now what left here? Dividend, cash. Cash is idle asset, same amount. Dividends will be same. What basically I've done is I've done nothing. Whatever he said, I've just remodified those figures. 20,000 becomes 2300. So my 20 becomes 46 crore. Cash as it is. Listed bond and debenture, he said what value? 8. Unlisted 20% decline means 1 crore will remain to 0.8. And then he had the other fixed interest securities, he said is a cost. Even if it does not say, I would have taken it at what? Cost. And rest I have the dividend will be same. What is my total value comes here? Assets. This is total assets value. This is rough way of doing. Exactly same way you'll do revision at home, please. 61.23 crores. The liabilities total, how much it comes? 6.32 and 0.75. 6.32 and 0.75. How much? 7.07. The A is my asset, this is my liability, net value minus of this 54.26 what crore. It's not net, total. Total value is total net asset value is 54.26 crore. How many units I have? 20 lakhs. Remember 20 lakh. So either divide by 0.20. Do not divide by 20. It's 0.20 crores. In crore we have a 70, lakhs we have 5 zeros. 54.26 divided by 0.20 lakh. That's the answer. 270. This is the 8 marks question. 271. Exactly same we will be doing. And this type of a question if comes, it's a blessing because they will make sure that you save time for rest of the question by doing this. And do not be in overconfidence at home when you do. This is the way of practice actually I have done. Because in format when I'll make it will take maybe 3 times of what we have done now. Because format you have to completely do. That we have to do in the exam. So we'll learn the way of writing in the exam. The homework or any kind of a work when you revise should be done this way. What value it has become, what value it has become, what value it has become. So these type of questions have been repeating in the exam over period of time. Nowadays what we started is slightly changing the way of asking the questions. That's it. So let's put down solution number 14. Solution number 14. Calculation of NAV per unit. Rupees would be in crore. Particulars. Basis. Amount. Assets. First asset was listed shares. Book value, market value. Book value, market value, listed shares. Market value. The way of doing would be 20 crores when the index was 1000. Now the index is 2300. Next part, cash in hand. Cash in hand would be book value 1 point 1.23. Listed bonds and debentures. Book value, market value. Market value. He has given the value. How much he gave? It shows. He said value of listed bond and debenture is how much? 8 crores. 8 crores. Unlisted bonds and debentures. Book value, market value. Book value, market value. Market value. Please remember, unlisted bond and debenture, any asset can have a market value. Property has a market value. Unlisted, he only gave. Why that fluctuation came, we'll see later on. He said 20% is the diminution in the value of the unlisted bonds and debentures. Why it has happened? That's our task, not for at least as of now. Market value. So that becomes basically, I'll write 1 into 80% of it. 0.80. Next, what we have? Other fixed interest and other fixed interest securities. Other securities. How much? This was book value. He said take it at book value 4.5. And next part we have is what? Dividend accrued. Book value point 8. Point 8. Total assets. Total assets. 61.33. Now we have liabilities. Now we have liabilities. Two type of liabilities you had. What amount? Payable on shares. What was the amount? 6 point. And expenditure accrued or outstanding. What is it? Expenditure accrued. How much is that? Point. Total. 7.07. Total net assets value. The word is total net assets value. In exam, you'll show exactly the same way, please. Total net assets value. A minus B. 54.26 crores. NAV per unit. 26 crore, and make sure you divide by point. It's a point, sir. Why point? The units were in lakh. The units were in lakhs. So if you convert this lakh 20 lakh in crore, we have a 70. It becomes 0.20. It becomes 0.20 crores. How much it becomes? 271 point. This is my answer. Which comes out 271.3. We cannot expect to lose marks in this type of question, please. We cannot expect to lose marks in this type of question. Even a clerical mistakes would be a crime, at least in these type of questions. Is that fine? We'll take an energy nap here before we move to the slightly different type of questions. Let's start. Let's quickly look up one more question of the similar type. Slight change in that would come. This was question number 14. Question number 26. Read once please quickly. I'll show you the first line, then I'll show the data below. Based on the following data, estimate NAV per unit basis of a regular income scheme. Now, one thing, why you will find exactly same data, same question, but there would be a one point which will be different. Now, when I do a similar type of a question, let's suppose, I'll keep telling you that exactly same as 14 or exactly same as this point is new. So maybe if I forget, when at the moment I say this point is new, it's your responsibility, highlight that point in exam. When you revise any one of them, that point has to be seen. So once read from your side, I'll tell you what exactly is the new point here. Read out once please. It appears exactly same. Now let me read out along with you. Listed share at cost 40 lakhs, cash in hand 2.76, bonds and debenture at cost 8.96. Of these bonds not listed and quoted 2.5, other fixed interest securities 9.75, dividend accrued 1.95, amount payable, expenditure accrued. No doubt on that, sir. First difference point which has come here is current realizable value of fixed income securities of rupees 100 is 96.5. It means the value of 100 rupees has become 96.5. Again I am saying do not stress too much why it becomes. At appropriate time in this chapter only I'll take, and balance part will be bond valuation. In fact, first hour of a bond valuation will tell you exactly why the values of the bonds or these change. What we know is 100 rupees becomes what? 96.5. 96.5. Then tell me, if 100 becomes 96.5, what would be the value of this 9.75? Roughly do it. 9.75 was with respect to 100. If it has become 96.5, basically 96.5 percentage of the value will remain. How much it comes? 9.408 or 41. You can round off to 3 or 2 decimal places depending on rupees are in lakhs or crores. So 9.408 or 402 or 9.41 which comes out. Basically what has happened, 100 rupees becomes 96.5. The value of this will fall. 9.75 will become 9.41. Number of units 2,75,000. All listed shares were purchased time when market portfolio index was 12,500. On the NAV date, market portfolio index is 19,975. Now it means 12,500 rupees has become what? 19,975. It means your 40 lakhs have become what? 63.92. 63.92. Now next part, there has been diminution of 15% in unlisted bond and debenture valuation. Unlisted, not listed, 15%. This is not listed, decline of 15%. Tell me the value of this. 2.125. Listed bond and debenture carry a market value of 7.5 lakh. Last point is entirely new for you. Operating expenses paid during the year. Operating expenses paid during the year. This is the reason I am covering up this question for. Any guesswork? Cash should be subtracted. Now two opinions are there. Cash should be subtracted or cash has already been subtracted. Practical life, the problem does not come. We know whether cash has been adjusted or not. In theory, how would you take a call? In this question, it gave you balance of 2.76. Nothing is mentioned. It's a opening balance, closing balance, so on. It means this cash we will always assume has already been adjusted. That is just for information sake. Now, sir, how would we know the language? Look at the language now. Look at the language of, let me come to 11th question first. And whenever I compare questions, you can benchmark accordingly that we have compared such type of questions. 11th question language I am reading. A mutual fund made issue of 10 lakh units of 10 each on January 1, 2008. January 1, 2008. How much money was collected? 10 lakh into just rough work. 10 lakh into 10. Money came in. Then he would have done what? He purchased investments, equity, government, this. Total amount spent. Balance left. Cash left. Then something happened during the year. I am not reading because this question will cover at appropriate time. Find out the NAV per unit given that operating expenses paid during the year. Again, same type of language. Now tell me in this question, should I adjust or not? Adjust. It's a clear-cut indication I should be adjusting because opening balance given, investment done, and then he says over the period of a time. I know it. 26th question, what we were doing. In 26th question, what we were doing, he did not specify. That means these could be the balances which have been the closing date. Now, if I look at 27th again, look at 27th question. On 1/4/2012, issued 20 lakh unit of 10 per unit. 20 into 10, how much money came? 200 lakh. 20 into 10, 200 lakh money came. Initial expenses relevant were 12 lakh, that would reduce. Then he invested somewhere 185 lakh. That means out of 200 lakh, 12 lakh some expenses happened initially. 185 lakh he would have invested. I am not reading anything further. Then I read here. Fund management expenses of the month of April, 8 lakh, of which 10% was in arrear. That means 90% would have been paid. My objective is, should I adjust in the cash balance or not? You tell me. Look at the language first. He is collecting money when, which date? 1st April. Anything happens, he will clearly mention that chronology. That means if something is happening after that, he has mentioned that subsequent event which is happening. So I will be adjusting, which is not the case in the question number 26. I hope you understand please difference. It's not his opinion was wrong or your opinion is wrong. It's actually institute should have mentioned closing balance or not. But by default, at some places, by looking at the language, we have to make a call whether it's a opening balance or a closing balance. In the case of opening balance, it will be clear indication this amount came, this was the expenditure, this amount came, this was the expenditure, and so on. So in this case, what we have, the if opening balance is given, he'll give the money was collected and then this subsequent events have taken place. In that, first task would be to calculate closing cash balances. Now let's move back to here. That means I'll take this value as what? 2.76. This will be same 1.95. Tell me the total assets value. Tell me the total assets value, please. $87.665. And tell me the liability value. 15 point. Difference of these two would be my 72.365 divided by what? 2 points. These are in lakhs only. Divided by 2.75. Divided by 2.75. We will get NAV. 26.314. It's okay. 314. This one. Now, can we solve it? Format, you know it. Try to make on your own and not just so that you get habitual about it. Is it fine? Let's put a star mark in front of this point, please, and make as a comparative analysis question 11 language or question 20 number 7. That could be the comparative language you can have. Solution 26. Calculation. calculation of rupees are in lakhs. First was listed shares we had. Forty crores, 12,500, 19,975. This came 63.9. Listed bonds and debentures, unlisted bonds and debentures, other fixed interest securities. Dividend accruals. Tell me the values. Cash, how much you have? 2.76. Listed bonds and debentures. He gave value, I think 7.5. He mentioned in the paragraph 7.5. Next, what we have? Unlisted bonds and debentures. It will 2.5 into what was the decline? 15. Can I write into 85 percentage? 15 is the decline. Balance left is 85 percentage. And you told me value as 2.125. Other fixed interest securities was 9.75. This was 9.75 divided by 100 into 96.5. Why does it change is not my today's task. 9.75 divided by 100 into 96.5. How much do we get? You told me 9.41 or 408 something. That's fine. Both of them are fine. And then we have 1.95. Cash is king. Cash is as it is. Total assets. 87.66. 87.885. 85.665. Then you told me here 87. Maybe you've missed out cash, I think. 87.665. Please form a habit of working on the calculator. If we do not respect the calculator here, calculator will not respect in the exam. May after November, November after May. So you have to fall in love or make calculator fall in love with you. Liabilities. Liabilities. Amount payable on shares. Expenditure accrued. 13.54, 1.76. Total liabilities. $15.3. I'll increase the screen once I've done, please don't worry. So what I'll do here is, now this is my data, what I have. Now what we can do is, it's 87.665 this. Next would be total net assets value. Total net assets. And then we have NAV per unit. Difference of these two. You will tell me the direct number. I think 72.36. It's in lakh. Figures are in lakhs. And this will be 72.36 lakh divided by 2,75,000. I think you had the units divided by 2.75. What number do we get? 6.31. $26.31. This is the first variety of questions what we have. Now increasing this variety to second, I'll take a small note again. This question we were doing in the hands of mutual fund, let's suppose NAV calculation. Now anyone would know, if they're selling their mutual fund, they'll get 26.31 with some adjustment if question says, otherwise this amount you'll get. Or if you want to buy, you have to spend this much. The rest of the any additional part, that some extra amount has to be given or not, there would be load factors which comes in, which we'll see at a subsequent time. So this is the rate at which you can sell and buy as of now. You can sell and buy. Now let's go to another note. If you've copied that, let me know. I'll make a computation of a return now. That means in the hands of the investor, in my hands. And again, the formula I would love you to be able to do on your own. As an investor, next notice, second note we have of the day, computation of return. This is in the hands of the investor. Do not copy once, help me out. NAV is net asset value per unit. NAV 0. NAV 0 means starting. I am putting that as a 10. Let's suppose, let me take a rough number before I put the data. Let's suppose 10 rupees you invested. At the end, value of investment became 11 rupees. 10 rupees you invested, at the end value became 11 rupees. You have not sold. If you sell, for example, if you sell, what is your gain? 1 rupee. Percentage return 10%. I hope you are able to take 10 rupees invested, 11 it becomes. If you sell, it becomes 11 minus 10 divided by 10. We call that as a realized return. That means you have realized. I purchased something at 10, at the end valuation became 11. I have not sold. Return is still how much percentage? 10. We call it as a unrealized return. That means my in books value has increased. This is one part. Now let's suppose I invested 10, at the end value is 11, exactly 11. During the period, this 1 year, the mutual fund has given me 40 paisa as a 20 paisa as a dividend and 40 paisa as a return in the capital gain. That means total amount they have distributed is how much paisa? 0.6. 40 in one and 20 in one form. Total I have received 60. 60 paisa is called my realized return, and 10 rupees becoming 11. 1 rupee is my unrealized return. If I try to ask you what is your total return which comes out, as a layman, what will you say? 11 rupees minus 10 is 1 return, plus what? 0.6. Total becomes 1 plus 1.6 divided by 10. How much percentage return? 16. Understand the formula. How do I create? That means 10 I invested, it became 11. In between, two type of income was distributed, dividend and capital gain. Sir, how does capital gain comes when I have not sold something? It is not you have not sold something. Mutual fund would have made some income. Mutual fund made some dividend income, distributed, they call it as a dividend distribution. Mutual fund might have made some capital gain, they distributed, they call it as a capital gain. But in your hands, both of them remain what? Income. That means I realized 60 paisa in hand, and 1 rupee is my increase in the value. So my end value is basically 40 paisa plus 20 paisa plus 11 minus 10. That's unrealized. 60 is realized, 1 is unrealized. Divide by what? 10 NAV. That means my formula becomes dividend distribution plus capital gain distribution plus NAV 1 minus NAV 0 divided by what? NAV 0. I hope you are able to make a sense, please. It's basically assume your money you have invested and what amount you are getting back. Let's put down, please. I'm drawing this rough diagram so that you understand, then I'll put the formula. During this year, dividend distribution happened 0.40. Return. Formula would be dividend distribution capital gain distribution dividend distribution plus capital gain distribution plus NAV 1 minus NAV 0 divided by NAV 0 into 100. Assuming this example was made exactly as it is, it would be 0.40 plus 11 . So you realize 60 paisa plus 1, and this you said how much? 16% return. Actually, this dividend distribution and this part is known as realized return, and between NAV 1 and NAV 0 is unrealized. I can call it. Realized means what has been received, unrealized what is in the books you have. And please, I'm saying very careful, the nomenclature of dividend distribution, capital gain distribution in your hands is income only. It's only what they have distributed from their side, mutual fund. So NAV 1 minus NAV 0 is nothing but unrealized. Unrealized. Done. Now I'll take up small question on this first. Then I'll merge bigger question what we have done, return calculation with this part, which is again 8 to 10 marks. The first question which I'll take is a very small part. If you copied that part, a very small part I'll take. which is come back to. It's not that small question do not come, but now I do not expect them to ask. They used to be a history. It has they used to be historical in nature. But few things have to be learned from these smaller parts. I am 100% sure 20-30% students still make a mistake. Question number 5 I am doing, please. Question number 5 we are doing. A mutual fund. And don't worry, we do plus minus pages 5, 37, 26, 48, 47, 20, 29. I'll do this way so that you do not sleep. I do not sleep in the class. Else, if you do, you know, fifth after fifth, sixth will come, after sixth, seventh will come. You can imagine if you know the movie, what will happen. In my case, you cannot even know what will happen. Which question will come after what. Keep guessing at your level best. At mutual fund that had net asset value of 20 in the beginning of the month. Its word is month very clearly. Made an income and capital gain distribution of 0.0375 and 0.03 per share during the month, and then ended the month with the NAV of 20.06. Calculate monthly return. This is a very important part, please. Sometime question will give you data of a month and ask you to calculate yearly return. You have to be very careful. You might from your side would have done right, but at the end, out of the 8 marks, you might find 7 or 6 marks only. That will be only you have not converted the month into year. In this case, you are not asked. Return formula will not change. Return formula will be same. Dividend distribution plus capital gain plus NAV1 minus NAV0 divided by NAV0, which comes out. It's only whatever return comes, month will come. If to convert in a year, we are not going to any kind of a mathematics. There could be some not disputes, some different alternatives how to convert into yearly, which I'll show you in one of the lengthier questions. So in these type of a question smaller, if he says month return is 1%, yearly return would be 12%. That's it. Nothing has to be done. So in this case, my formula would not change. I'll apply the formula exactly as it is. Just be clear when you calculate the last part of it. Solution 5. Computation of return. Dividend distribution plus dividend distribution plus capital gain distribution plus NAV1 minus NAV0. How much was dividend distribution? 0.0375 plus tell me the numerator value. How much numerator value comes? 0.1275. Total becomes 5% per month. Now in this case your answer would end here. I'll do a seva part. Anything which I make under these kind of a clouds, part of a seva which comes out. It's not part of the answer here. Return per annum, if I would have asked. Return per annum. In such type of a question, straightforward answer should be 0.6375% into 12 divided by 1. That's it. 12 divided by 1. 7 point percentage per annum. Those who have done can read question number 27. Put a single star in front of that. Question number 27. And you can do one thing now. For example, what I expected you, what I told you in the first class was, let's suppose this you are doing here. Whatever page number of a register is there, you can write here. Let's suppose on the register you have written page 1, 2, 3, 4 on the top. You can write this is done on page number 15, for example. So that when you come back after 1 month time, because I tell you very frankly what will happen. Few days extraordinary energy would be there. After, for example, now today I gave you 10 minutes break. Everyone came in 8 minutes time, 7 minutes time only came. After that, I'll give you 10 minutes, you'll take 11 minutes. I'll give you 12, you'll take 15 minutes. Easy, you'll go. It's the normal psychology I'm telling you. After that, 1 week later, energy would be there. Second chapter starts, slight energy. Third class, one day by chance you became absent. I'm just telling you one day. It's okay. Live stream also, we can see from home. Leave na. That 2-3 days. Recording also we have a facility, 50%. Leave. That happens. By the time third chapter reaches, first chapter, mutual fund, you'll be able to recall. Second chapter, okay. By the time fourth chapter will come, a month or 1.5, whatever time gets over by that time. Which chapter? Subject? Should not happen this way. This I'm telling you very frankly. I noticed it. 10 minutes break. You come in the evening batch. They were also same energetic when the starting happened. Now I give them 12 minutes break and they'll take 15 minutes. Today you came in 8 minutes. I was surprised. I did not even get the chance to have the check what everyone has brought today. I'll not eat every day from your tiffin. Please don't worry. It's not you stop coming tomorrow. Some of you have to come. And I love idli. If you bring idli, it's perfectly fine for me. What I'm saying is, keep this energy. In fact, you have to come for your own sake. One important point which I tell in the class, although these are you have the facility of a look back home, some classes and so on. But the moment you will assume that in the mind, your motivation will go. Second important part is, yes, someday it might happen. You have been late night party once in a blue moon out of the stipend which came. You went out. You went outside and had the party. It's okay. You come at morning 6:30, 7 o'clock, 7:30. No matter what time you come, you should not feel odd. I'll not feel odd, because I tell you why. Because 1 day lapse or 1 hour lapse, it will make a huge difference. If you have a lapse of 1 hour, let's suppose someday I came at 7:15 or 7 itself, for example, I came, but I would be able to cover it up. Reason being, in the class itself, know that this was the flow. Maybe in between, I'm saying I'm not able to get. So let's suppose I try my level best that when I come 10 minutes or 5 minutes, I do the warm up exercise. That do not make a habit that you will come 10 minutes late only always. So I do a exercise in such a way. I try my level best that we cover up what we have done so that you get in the normal flow. If half an hour you missed, by chance I have taken some concept. Let's suppose in that scenario, still do not feel bad. At least you are getting hint that I'm taking some names. Means you are doing. If you take a break of a 2-3 days and then you come back, then it could be a challenging part. You'll miss out the beauty of the live or online. Means it's a regular basis. Otherwise, you have n number of facilities you can do. I do not want you to get lapse in that front. Although, even if you want, even if you'll watch at home the recorded lecture, still you will be same energetic. It's not so. But I want, since you have taken the pain to wake up for few days now, take that pain. Once in a blue moon, for example, festival season comes in between and you're going home, it's perfectly fine. There is no problem at all. That already I'll take care. I'll have the provision of that festive season which comes in the Hyderabad, and so the kind of festive seasons we have. So that I'll already taken care of. But from your side, I want that kind of a dedication should be there. You are coming for your sake. For my sake, only come those who can bring the breakfast. Otherwise, there is no need. So my sake, don't worry. Anyhow, I have to come. So what I'm saying is, keep that momentum. Do not over exaggerate. Means whatever feeling you get about the subject, any subject, it's not about my subject, I'm saying any subject when you join, try to finish it off with sincerity. And the way of writing this number is only because after a month time or 2 months time, if I, for example, will have a concept of a test, for example, for this batch evening we had yesterday, for example, we have a test. In that, for example, I tell you that these two chapters will be for the test available. Though I'll upload them on the drive, what you get, what access, what you'll get, but that is your own time. Even for that, when you attempt the test, for example, they are uploaded, you download, at least you should know which chapter I am preparing, where the question was done. It becomes easier for you, because it cannot be that you have a 5-7 register and it search that this was done or not. Second important part it becomes is the moment you write the page numbers, you know that I have covered these questions. Do not let those piled up till the end. That means, let's suppose you have any of the unticked question. It could be possibility that you have not covered it or maybe by chance missed out. So do not leave it at the end of the course, I'll see at once. It will be a problematic. Chapter ended, I should have at least these questions ready with me. If anyone is not done, then one weekend, Sunday or Saturday, whichever comes in, I'll finish that off. This will help you, because otherwise subject is very lengthy. By the time we end the course, you might have the questions running in 800, 900,000. I don't know how many numbers you'll have. It will be very difficult. Go back and then remind what was the question, what was the objective, and how should I have done. So make sure that it is for you, you are doing an activity that you cover up everything. Although at the end of the chapter, I take a provision, I take a stock taking that I've covered everything, because I keep writing that this was covered in this class, this was covered in this class, and so on. But from your side, you should also know that you have covered. For example, fifth is covered. In by chance you do not take it out, at the end you might feel that we did not cover it. So that lapse should not be there. At the end of the chapter, before you go to the new chapter, please make sure you have taken the stock taking of that. Now let's read question number 27. Important question, which is important question. This course is tough, I know. CA course is not easy, it's tough, because it requires a kind of a time and dedication from you which is unimaginable. No matter anyone says it's a easy course, etc., we can do, it's not possible. Because sacrifices more than the study hours is the kind of different sacrifices you have to do. Continuous basis means you cannot have that liberty of even a 10 days time in between a 6 months period that you can spend. One, for me, the relaxation can come. I'll finish off, I might give a break after that batch, I might not take the next batch for a month time or so. But for you, its liberty is not there. Either audits will take your time, GST, this return, that return, etc. return, stipend still remains 5,000 only. 27th question. Very easy question, interesting. 2 times have been asked in exam, I think. Take 2 minutes time, you read once, then I'll read out with you. Take 2 minutes time, you read once, then I'll read out with you. This question, ultimately net answer, what he required, what is the requirement? Return. Now look up please, how do you framework your mindset, what we have to do? If you look at the last, I am not read, I'll read it, don't worry. The question is asking about the return at the last, that's fine. Return, I know my return is investor's point of view, I need NAV 0, I need NAV 1. If by chance they have distributed dividend and capital gain, both I need. In this case, I think he has distributed both. Number of units you know in the first line. NAV 0 you know in the first line. What rate he invested. First line gives you. then in between first paragraph he would have given you that there was a distribution of the income. That's also I can do. NAV1 is not mentioned anywhere. Now my task remains is I have to calculate NAV1, because till the time I calculate, he is asking annual return, data is 1 month. He is asking 12 months return, data is 1 month. That means whatever answer I'll get 1 month, then I'll convert to 12 months. For that 1 month, I need NAV1, NAV0, in dividend distribution, capital distribution, and number of units. He has given 100. Even if I don't have, that will not make much difference, because his number of units opening and closing are same. NAV0 I have, dividend distribution information I have, capital gain distribution I have. The NAV1 data is not there, but he has given some data by which I can calculate my NAV1. To calculate NAV1, I have to first work upon is the cash balance, because it is starting with the opening cash balance. That means in these type of a question, your first prima facie task would be, whenever opening balance is given and you are arriving at the closing balance, the first task would be cash balance, then your closing NAV. Then once you have closing NAV, then things will become easier. So I'll read out with you. I need the help on the calculator, please. I need the help. If you are able to do verbally, putting on the paper would not be tough at all. Look up. He says on 1/4/2012, 20 lakh units were issued at 10 per unit. How much amount? 20 lakh into 10, how much amount? 200 lakhs. Initial expenses 12 lakh, 200 minus 12, 180. 188. It invested the funds so raised in the capital market instrument to build a portfolio of 185 lakh. That means investment is done 185. 200 lakh collected, 12 lakh expenses happened, 185 lakh he invested. So basically my opening cash balance, how much you have? 3 lakh is my opening cash balance. I'll put 3 here. You do not put it, please. I'll put it. Next part. During the month of April, it disposed of some of the instruments costing 60 lakh for 63. Two things have happened. Cash inflow of how much? 63. Capital gain of how much? 3 lakh. Keep that mind. Capital gain 3 lakh. 60 lakh. 63 lakh is your cash inflow. So you have 3 lakh cash plus what? 63 cash came in. Capital gain you keep in mind, and use the proceeds in purchase of the securities for 56. Inflow outflow minus 56. 3 lakh cash balance plus 63 lakh cash balance, because you sold something, minus 56 purchase was done. Fund management expenses, these are relevant to the fund, happened for the month of April 12 were 8 lakhs, of which 10% was in arrears. How much cash outflow? Cash outflow is 7.2 minus 7.2, and outstanding expenses 0.8. So two things are in your mind: 3 lakh capital gain and 0.8 outstanding expenses. Then he says in the April the fund earned dividend amounting to 2 lakhs. Income of 2 of the fund. Any cash inflow? If the dividend income is there, either it could be outstanding or it could be received. We'll assume it to be received. 2 lakh. He received 2 lakh this. 3 was opening cash balance, 63 sale of investments, 56 purchased, 7.2 expenses, 2 dividend. Next line is very important. Highlight that, please. Distributed 80% of the realized earning. Area of a mistake is this. 80% of realized earning. Now your realized earning are 2 income. One was 3 lakh capital gain. Second is 2 lakh dividend. Its dividend is not only realized. It was mutual fund. 3 lakh capital gain was realized. 2 lakh this total income. 5 lakh. How out of that how much they distributed? How much? 80% minus cash outflow minus 4. Sir, what about the balance 1 lakh? You do not have to get worried. Understand the reason. How much income they earned? Dividend income 2 lakh. Is it included in cash balance? It is included in cash balance. Yes. And second, what they earned? 3 lakh capital gain. Is it included here? That means cash balance increased by how much? 5 lakh. They are paying how much? 4. That means what they have given it back to you in your hand, realized is 4 lakh, assuming totality. Realized is 4. That remaining unrealized is part of what balance? Cash balance. If it is part of cash balance, then automatically this will be part of what? closing NAV. I hope you're getting my point. Do not get confused on that, please. They earned 3 lakh as capital gain, 2 lakh as dividend, 5 lakh increase their cash balance. Out of that, 80% they're distributing. That means 4 lakh they're distributing. That 1 lakh remaining is still part of the NAV 1 calculation. So basically 3 lakh was opening, 63 lakh inflow, 56 outflow, 7.2 outflow, outstanding I'm leaving as it is. Dividend was 2 and this was 4. On 34 2012, market value of the portfolio is 198. This will help in calculation of NAV 1. My cash part is over. Tell me my cash balance what comes. Point 8. Point 8 is the cash balance. This has come. Now verbally tell me NAV calculation. Portfolio value how much? Cash balance 0.8. Any outstanding expenses? 0.8. So my total NAV would be 198 portfolio, 0.8 lakh the cash balance minus 0.8 outstanding expense. What comes? 198 divided by how many units you have? 20 lakh. What will be your this? How much will be your NAV? 9.9. This comes 9.9. Is that fine? Then for calculation of the return, I'll do is what? That capital gain distribution plus dividend distribution, which has happened 80%. I'll calculate per unit. Then I'll apply the formula dividend distribution, capital gain distribution, NAV 1 minus NAV 0 by NAV. If you are able to do this way, the things will not challenge at all. Whether it's a mathematical, non-mathematical, any kind of a length of a question, I would advise just get the hint what is my last answer, what he needs. For that, what are the numbers required, what numbers have been given and what numbers I need to calculate. Can we do that part out? Let's put down. So first part in this will be calculation of cash balance on 34 2012. Solution 27. Let's put down. This is AC remote. I hope. What question we were doing? 27. Calculation of cash balance as on 34 2000 rupees in lakhs. Opening cash balance. You had 20 lakh units into 10 minus initial expenses was 12. 12 minus investment 185. Three lakhs. Then I have during the during the month of April disposed of some instruments 63. Inflow is 63, please. That means sale of instruments. Then he says proceeds were used purchasing securities of 56 lakh minus purchase of securities. $56. Then he said fund management expenses 8 lakh, 10% are in arrears minus I'm putting here 90 percentage. Then there was a dividend income. Two, distribution of the realized earning 80% minus distribution of realized earnings. And what I'll do is, I know after that it will be a closing cash balance now. So I'll leave one two line here and I'll show somewhere here or on the right hand side my realized earnings. Because after that there is nothing adjustment in the cash balance. In realized earning I have dividend income which is clear cut 2 lakh and capital gain. Item of 60 lakh you sold for 60 lakh. Total realized earning is 5 lakh. So what you have here is 5 lakh into 80 percentage. This is your closing cash. This is your closing cash balance. Next, what we'll do? How much do we get? How much do we get? 0.80. 0.80. Now, first part is to calculate the net asset. We'll do total NAV, total assets in fact. Total assets, market value of portfolio you had. He gave you rupees 190, 8 lakh plus cash balance. This question generally comes for 8 to 10 marks. Rupees 198. It will come back. Don't worry. 198.8. Now calculate on your own, please. The minus liability, minus that liability, the NAV per unit. NAV per unit. Calculate that please on your own once. Outside liability was how much? Point 8. Total NAV would be 198. Total NAV would be 198 minus calculate NAV per unit. Calculate NAV per unit. NAV per unit. 198 lakh divided by what? Divided by 20 lakhs. How much do we get? 9.9. Return calculation. For return calculation, what we'll do is distribution per unit. Let's put down calculation of return. You can write the way I speak. Calculation of return. Calculation of return. Distribution per unit. Distribution per unit. Two things you have distributed per unit. Distribution per unit. Distribution per unit. One was dividend distribution. Dividend distribution per unit. And next was what? Capital gain distribution. In fact, dividend distribution, look up please. Dividend distribution per unit. This was 2 lakh divided by 20 lakhs into, you know what you'll do? 80%. It was only 80% what you distributed. 2 lakh divided by, similarly calculate capital gain distribution please. Similarly calculate capital gain distribution please. Capital how much do we have? Into 80%. Just tell me the amounts what you get. 0.08, 0.12, 0.2. Now you can calculate using this data return per month. Return per month. Write down the formula please. I am not writing here. Write down the formula. Write down the formula. Dividend distribution plus capital gain distribution. Write down the formula. Dividend distribution plus capital gain distribution plus NAV1 minus NAV0 divided by NAV0. Dividend distribution plus capital gain distribution plus NAV1 minus NAV0 divided by NAV0. 0.08 plus 0.12. NAV1 was 9.9 minus 10 divided by 10 into 100. It's a per month you will get. How much do you get? 1% per month. 1% per month. Annual return. Annual return. Annual return would be 1% into what? 12 by 1, 12% per annum. And if you do not calculate the 12% per annum, there could be a challenge, please. If it's 10 marks question, you might find 8 or 9 marks he would be awarding to you. The mistake of the area is this last part, which annual by chance we forget because month data was given. Second doubt which can come when you revise at home is, sir, he mentioned the investor is holding 100 units. Investor is holding 100 units. That has no significance because originally opening also 100, closing is 100. In case the numbers change, then we'll see what to take in the subsequent part. So that was not my objective as of now. Whether you calculate on one, if you want to calculate on 100, you can do is what? You can multiply dividend into 100. You can multiply the capital gain and then according 100 NAV opening and closing and so on. The net answer would come same, which is there. So this was the second part of the question which can be there. Now rest every part would revolve around the same thing. So I'll not do much because even this I think needs some part to be repaired. We'll do a quick recap what we've done. Just go back to your initial pages, please. Just go back to your initial pages. If I go back to initial pages means register. What we started with the mutual fund. Mutual fund, I'll just do a recap quickly what we've done today. It's a nothing but it's an indirect way of investment in the market. From me, the objective was mutual fund generates a return which returns back to the investor. To understand the return in the hands of investor, I need to know what is my closing value, that we call as a NAV. NAV1, NAV0 is the investment what we do, NAV closing find. First part of the concept we did was how to calculate the NAV. NAV calculation is nothing but asset value minus outside liabilities divided by number of units. The assets value would be calculated at what? Market price. In case market price is not available, then at book value. That will give me NAV. After that, we have done the second part is return. Return is in the hand of investor. What amount he invested, what amount he is realizing, and what amount is increased value shown in the closing NAV. So dividend distribution, capital gain distribution plus NAV minus NAV 0 divided by NAV 0 will give me the return. In addition, now things can increase only when he can ask you to calculate what? Closing cash balance. In case opening cash balance is given, then closing cash balance should be calculated. Using that closing cash balance, NAV should be calculated, and then you can put in the return formula. Area of a mistake can be he is asking per annum and we might end at a month. That keep in mind which comes out. Is that fine? So that's it. Will do it for today. I'm not giving you any homework, just for one day. Tomorrow onwards I'll start giving you, and whatever how the answers would be shared with you, how that I'll discuss in next class itself. That exactly how the answers would be shared with you. You'll be given some link and so on. Accordingly, you'll get everything there. So nothing to be worried. For today, just revise that. From tomorrow, I'll continue from here. The questions will start moving only in a few points, plus and minus, language formation, reverse calculation of the return, or return given reverse calculation of the NAVs and so on. So we'll have the questions accordingly. Okay? So let's take care and bye bye.